Welcome to the 4th of May edition of the GPS Global Wallet. Today we'll be talking about the effects of the ECB rate announcement later today and the effects of the Fed Reserve actual announcement last night. So last night, the Federal Reserve in the US, as expected, raised interest rates by 25 basis points. Jerome Powell said, we anticipate that this will be the last rate hike for a while. They need to see how inflation sort of reacts to this rise. And also they think that the employment data with the non-farm payroll coming out tomorrow may soften over the next few months. As a result, the euro dollar rallied for a third straight day, getting close to 111, and cable sort of hit a high of 125.93. Both are slightly off this morning because obviously later in the day you have the ECB rate announcement. Most in the market believe there'll be a 25-point hike at the ECB, but there are some banking contributors that do believe they may actually go to 50 basis points. If they do go to 50 basis points, then you're going to see euro dollar surge through 111, but most think 25 is what's going to happen, and that will make the ECB rate at 3.25, with the Fed rate being at 5.25. As we go through the rest of the week, as I said, we have non-farm payroll tomorrow, and that is obviously going to be an indicator of how the employment data and the employment market in the US is going at the moment. And I think we will see, going over the next few months, if inflation starts to come down in the States, hopefully in Europe, and also hopefully in the UK, we may see an end to these rate hikes that obviously we've seen over the last sort of 9 months, which have been quite aggressive compared to where rates were, say, 2 years ago. So if you want to follow us, please go to Apple Music or Spotify. And for the last thing, to anybody that's a Star Wars fan out there, may the 4th be with you.